And that means we are live here on YouTube 10/8/2019. It is a Tuesday. The markets are down, and we're going to break all that information, the news, the charts, and all of that analysis down for you today on our halftime report. We've got Cody, we've got Matt, we've got Tim. Matt, how are you doing this morning?
I'm doing better than 28 Chinese entities. I'm
Yeah,
doing
they.
better than Ambarella.
I was,
I'm doing
if you
better
had to
than,
ask me, I would have said I'm doing better than PPI data, but you went with the
Good.
28.
I went with the 28, but the PPI data is pretty bad as well. What else am I doing better than? I'm doing better than
The NBA?
today.
Doing better than the NBA.
I'm doing much better than the NBA, who their hypocrisy is just absolutely amazing today.
Yeah.
Amazing.
Or the coach within the NBA.
The NBA prides itself on freedom of speech, allowing their players to say whatever they want to, unless it threatens their Chinese business. And when Daryl Morey, the general manager of the Houston Rockets, came out and just tweeted something that he stands with the people of Hong Kong, all of a sudden the NBA got blacklisted from China, and Daryl Morey got smacked around by the NBA. Oh, just terrible NBA. Looks terrible.
I think it's not very good. I will say this, just kind of as a thought, obviously today, Yao Ming is in the news because he's one of the most famous Chinese players of all time. They're going to try to lean on him to do some repairing here between the Chinese government and the NBA. Who knows how that's going to shake out?
He's one of the presidents of I don't know what he's the president of, but he's the president of some type of basketball program over there.
Yeah.
And the Chinese market's the second biggest NBA market, team.
Yeah.
I mean, it's a massive. We're talking billions and billions of dollars in television revenue and so on and so forth. But I just felt like, I just felt like the NBA allows its stars to come after any politician they want. They allow, Greg Popovich, which is an amazing coach, best in NBA history. Steve Kerr, I have a tremendous respect for them. They can come out and rip Republicans in the U.S., but Daryl Morey says, I stand with the Hong Kong protesters. And all of a sudden it's no, you can't say that. I just felt it was hypocrisy at its best.
There's a couple things. Number one, the Zen master, Phil Jackson, would take exception to you calling Popovich the best coach in NBA history. Phil Jackson did get 9 championships.
I think he ruined his reputation with the Knicks.
Debate that later. We can. I'm happy to do so. But it is interesting in terms of trade war dynamics because you have big news this week, Matt. In fact, we've got a big meeting where a Chinese delegation is coming to the U.S. and there's 2 stories here today that didn't have to happen that are throwing a wrench into it a little bit. I'm not sure they actually matter, by the way. I'm still trying to process that. The NBA thing, I think, will go away. The 28 companies, why would the administration target them Tuesday before they meet later this week with China?
Well, there were 19 government entities and I believe 8 or 9 corporations that got blacklisted. And they got blacklisted by the Trump administration and the US government because of human rights violations against Muslim population in one of the territories within China. And so when China does this type of nonsense, we all should support any US politician.
This is a good smack around. Yes.
Yeah, we should always come out, and it's not about trade at this point. It's about humanitarian violations at this point. And so I support the president for doing this. I support any politician who comes out and says these humanitarian crises are not okay. And let's not forget that the US's role within the global, political environment is to lead the global political environment. So to me, there was a timing issue here, Tim, that maybe didn't need to happen. Maybe next week would have been a little better. But I'm not going to criticize the president and criticize the Trump administration for putting some of these entities on, blacklisting some of these entities, given that. But it does have a real economic impact, though. I mean, take a look at Ambarella, for example, a high flyer in the United States here. And if you remember Ambarella, they were on the IBD top 50 list for years and years. They were on, in fact, Tim, if you originally remember, Ambarella was on the original Tackle 25 back in, I believe, 2014. Mm-hmm. And Ambarella down, a good 9% today because one of the entities that they do business with was on the blacklist. And so it does have a real economic impact. And the reason, if you want to give a headline for why the market's coming down today, it's just tensions within the Chinese-U.S. trade war. They kind of got put on the back burner a little bit. And a lot of the news I'm seeing here and reading today basically states that they're not going to get a deal this week. And actually the Chinese delegation might actually leave a day early.
That's interesting. You know, obviously trade war news is going to dominate the headlines. Mark and I were talking about it during the Skyline in the podcast yesterday that surprise, surprise, here we are again in October and the trade war news is still popping in here. I'm with you. I support a lot of what's happened. It's going to happen even next October. It would not surprise me if we're still talking about this. It goes back to all the discussions we've had over the last few months and months and months. Matt, I don't see a resolution anytime in sight. So what is the market going to lean on for clarity to take a direction? Because we're still neutral. We're in the middle between support and resistance. I mean,
I don't think Tim, we're going to have good days and bad news from a trade perspective, correct?
Yep.
I mean, this is the song and dance routine the market's had for the last 18 months. There's going to be good days when the market goes up. We're going to say, oh, positive news headlines on Chinese trade war. And there's going to be negative news headlines. I see this more as just a negative news day and then a technical situation where you had an inverted hammer yesterday and then a downward movement in price. But I think the news of the day here is, and kind of going back to what your original question was what is the market going to rely on here? It's going to be Fed talk, Tim. And that's what we saw here today. And I think, Cody asked, what was the question he asked? How'd you ask it, Cody? He said, what's the most important thing?
Yeah, I said, of all the headlines this morning, what's the most important thing? Is it the blacklisting? Is it the PPI data? Is it the NBA China? Is it the talks that are about to start? What's the most important thing right now? Is it Jerome Powell about to give a speech today of sorts?
Like we joked about in the pre-production show on all these Fed chairman speeches. And listen, pillow talk with the wife is not a Fed speech. An elevator conversation is not a Fed speech.
I'd have to listen into that speech to be able to declare that.
Chairman Powell gets up and gives a 5-minute, opening to a conference, that's not a red economic calendar. Come on, Forex Factory, get it together here. But the PPI report is the real data here. Everything else is just par for the course that we've been going through for the last 18 months. But this PPI report is a damning number, in my opinion. Yeah. Number one, the PPI report, Producer Price Index, is an inflationary calculation for the producers of goods and services here in our economic system. And that came in at a negative 0.3 on both the core PPI report and the PPI report. And what this indicates, Tim, is this indicates a lack of demand. That's what it indicates. It is not a supply issue. It is a lack of demand issue. And when you're talking about capitalism and you have a lack of demand issue, that usually is a fairly negative economic response to that. So I do think the PPI report is the most important factor in the market today. And that leads me to two things. It leads me to just further evidence, right? Further evidence that a recession is coming. That's number one. Number two, it also leads me to believe that the Fed will act a little bit more aggressively with interest rates in 3 weeks than what they would have. And in the last 2 weeks, guys, we're seeing the labor market's still strong, but we are seeing it slow down, correct?
There's no doubt about that.
And that has to. That always happens when you normalize the unemployment report. So that's number one. Number two, the ISM manufacturing report last week was the worst in 10 years. Number three, the PPI report this week is a damning number as well. That leads, and by the way, I watched an amazing YouTube video, and I wish I had the link right now. It was, he's a great follow on Twitter, by the way, Downtown Josh Brown. And he was interviewing the original author of the yield curve indicator back in the 1980s. And basically he was talking about what the inverted yield curve is, how he created it, why it was important. And it was just an amazing conversation from the guy who invented the yield curve. And what he was talking about is what he was seeing in the 1980s was this environment where the last 4 recessions in the 60s and 70s, how the inverted yield curve was the number one indicator that basically predicted the next recession within the next 6 to 18 months. And in the next 3 recessions we've had since the 80s, the yield curve has done the exact same thing. And if you'll remember, the yield curve inverted on June 30th, guys. And so basically he was talking about how this is the indicator that creates this. And there was a wonderful question about a lot of times when something becomes public, it at that point it becomes non-existent to a
It
certain
becomes a
extent.
self-fulfilling prophecy at that point.
Exactly. But now it's becoming that self-fulfilling prophecy to where all the traders now use it, all the investors now use it. It was just a wonderful, wonderful conversation. And, I learned a lot about the yield curve there, a little bit more than I already knew. But you're just seeing further evidence of what we all know to be happening here. The global slowdown is real, and now it's impacting in the U.S. And the Fed is going to respond a little bit more aggressively, in my opinion.
Let me ask you, if we pulled 100 billionaires on Wall Street who run hedge funds or not, maybe they have billion-dollar accounts or hedge funds or whatever it is, the massive elite of the people who trade, how many of them would believe that an inverted yield curve is going to lead to a recession? Do you think that is a self-fulfilling prophecy? Do they all kind of have that?
I would say, you're talking about the active hedge fund managers?
Yeah, yeah.
I think they started
It's
moving
not
money
as
when
high
that
as you
happened.
think.
I don't think they all agree with it. You know what I
It's
mean?
not as high as you think, because Tim, it's not just the fact that you have all these hedge fund managers, but you have a lot of people on Wall Street that's never seen a recession.
That's right. That's one of the
Right?
problems. Yeah.
Okay. You have a lot of people on Wall Street that's never seen a recession. You have a lot of those whiny little babies on Wall Street that basically grew up in an environment of quantitative easing, modern monetary theory, free money, just corporate socialism. And so, the modern monetary theorist doesn't believe in those inverted yield curves, doesn't believe in slowing growth, they believe they can print their way out of it. They believe they can enhance the debt out of it. They believe they can constantly increase debt and money that's supplied to keep the market afloat. So what percentage of them? That's a very difficult question to answer, but I do believe it's not nearly as high as you think it should be. Right?
Probably most of them, but I wouldn't say all of them for sure. I do think there is a minority.
I would say a larger percentage of them are concerned by it.
Yeah.
Right. But I would say a good 20-30% don't even know it exists.
Yeah. I think the one thing that is very, very clear, though, the Fed will be concerned about deflationary data. That PPI number today was just as bad to me as the manufacturing numbers last week. We've got another CPI number later in the week. PCE is what they track the most. But Matt, when you see a negative 0.3% where it was expected to be growing, that's something the Fed is going to pay attention to. So it makes me wonder the question, though, real quick, why isn't bad news good news, though? Okay, because that usually how the market interprets it. If the Fed's going to cut, why isn't the market up?
Well, number one, the market already believes that they're going to cut. There was a 70%. Can you check the CME Fed Watch tool to see if that indicates?
Let me double check it. Yep.
But there was already a 70% of the market that believed there was going to be a cut. So I two things, Tim. I think that the market already believes there's going to be a cut. So the economic data doesn't support further cutting. The Fed's not cutting 0.5%. So it's not exactly like the Fed's going to be more aggressive on that. Number two, you had the combination of negative trade war news, 28 entities out of China being blackballed, and the NBA news, which was further put an impact and a microscope on that Chinese-U.S. trade deals as well. So I think with the dearth of negative news from the Chinese-U.S. trade war, offset the bad news is good news type mentality that we've seen in over the last 4 years. We've seen that type play out. But I just believe, kind of like the market believes, that there's probably further evidence for aggressive action out of the Fed.
And that's what we're seeing in the futures market here today. But by the way, the CME group has a thing called the Rate Watch tool. You can find it online. I'll drop the link in the chat here in a minute. Yesterday, the expectation was 75%. Today, it's 80%. So just further solidification of your point that, they already kind of believed it. Now they're just even believing it just a little bit more, which, by the way, is prone to then flip-flop the other direction when they decide
we have
to change
the
their
CPI
mind.
report tomorrow, which is CPI is CPI tomorrow, or is it
Thursday?
Okay, we have the CPI report on Thursday that will have further evidence there as well.
Yeah, going to be interesting. Obviously, the S&P here stuck in a range. The intraday kind of turned and pivoted and sold off here.
It's starting.
Yeah, a little bearish retracement here, isn't it?
They were watching the halftime report talking about how there's further evidence of a rate cut. But you're overextended on this short term in your intraday analysis, Tim. You're coming into intraday support. You're testing those lows of the previous week here on Friday. You have the previous lows right there, about 28.76. Right now, you're forming a little bit of a bearish retracement. However, if you're looking at this from a shorting perspective here, I don't like that rounding bottom.
No,
That's like a bottom in the market today.
Yeah. I mean, shorting into this candle is guessing at this point. So you're heading into about 3.5 hours of the trading day still left in front of
I'm
you.
looking at triggering into buy side mechanics right now on the bull list.
Let the price action show you where it is, because the market will tell you what is happening. You can trust the price. You can look at the price, and price is always king. As I look across the indexes, Matt, the Dow, the S&P, the NASDAQ, as always, look the same. The Russell is pressing closer to support. And I do think if the market does spin down, it could be the one index that ends up turning down the quickest if we do break support. Keep an eye on that if you are Condors traders. Anything across the other indexes that you're seeing?
No, I mean, whenever we're looking at the Russell 2000 at this point, it's been stuck in the range, and we've been very consistent for 8 months on the Russell 2000 now. You don't aggressively manage that thing unless support or resistance get violated here. And, support's not violated. Resistance hasn't been violated. It's been stuck in its range. But you are seeing a little bit of a bear flag rally coming back down now with confirmation. That might pick up some steam if this market does spin out of control and the S&P starts getting underneath those 2,900 levels and the Dow starts spinning. If that does occur, I do believe you should manage the Condor system if 1440 is violated.
I agree with that. Give me the US dollar, if you will. Obviously, that pivot confirmation did happen. The euro dollar cross pair was looking good. Cody, we nailed this one. You talked about it in the Forex report. We brought it up in the halftime report. We were watching this thing. There's an argument to be made that Forex is just a cleaner charting, in many, many regards.
Sometimes it is.
Not an argument.
Yeah.
There's not an argument. Yeah. Okay, there's no argument there. When you're talking about the chart on the S&P 500, right there, and then you're telling me there's an argument, there's no argument. The dollar's a cleaner chart.
Yeah.
This was my argument last week when I was saying, would you rather? That sometimes I want a little bit more tools in my belt, because I like being able to jump over and know how to trade this versus looking at the S&P and be like, really? Like, make up your mind.
Yeah.
Well, that's why I love having the ability to trade multiple instruments is sometimes, I don't trade Forex as much as I used to, but I love having the ability to come in here and when Cody tells it, hey, Matt, look at the euro. All right, Cody, let me put my order in.
Which you did. Like you did that before we got off yesterday after the pod. I was like, Matt, that doji's turned into a red doji on the euro, and you're like, I got my order in.
Clean setup. Horrible PPI report. The dollar still stayed strong. There was negative news coming out of the Brexit deal over the night, guys. Angela Merkel told Boris Johnson that his plans for avoiding customs on the Irish bloc was not going to work. There's going to be a hard out here in a couple weeks.
Yeah, and we'll see how that ends up shaking itself out.
Actually,
I do believe
the pound dollar, the sterling dollar cross pair, because I actually missed that one because I was too focused on the euro dollar, but the sterling dollar took quite a turn today.
Yeah, it went down about 5%.
It's got a head and shoulders forming.
But I mean, if you're looking at, we're going to miss things all the time, but I don't think you missed that. I mean, looking at the euro dollar cross, that's a much cleaner chart.
I think this is a cleaner chart. And by the way, the pound dollar cross, you could even argue, has not confirmed yet. If you're a swing trader, as a day trader, which is the way Cody usually trades Forex, it probably did on the intraday.
Day trade into swing trades.
Yeah,
I mean,
that's exactly what I do. I day trade into swing trades, and then I'll take half off or a quarter off depending on how long. Like I said this morning.
That's fine. Hold on. Time out. Mentor moment. That's fine if they're profitable trades. If you day trade into swing trades on losing trades, you're breaking rules, right?
Yeah.
Okay.
Yes, but my day trade rules would get me out before it becomes a swing trade loss.
Yeah. Where's Father Stockaducci here? I need some confessions here.
Well, no, I even said this morning when we got on, I've already triggered and taken some profit off of my
he's
euro.
Adding and subtracting from the position. He's trading his trading plan. But I do get what Tim was saying there. A lot of times, we poke fun and make fun of people who, they started off with his day trade. It went against him and they turned it into a swing trade because.
Oh, okay. Yeah, that. No, not that.
That's what Tim was talking about.
A bad daily trade is a bad daily trade, and stop it.
Yeah,
I've had conversations with students in the past that they look at their account and I'm like, okay, so why do you own that stock? You've owned it for a year. Well, I bought it as a trade and then I just kind of held on to it and I didn't want to get rid of it. And then I held it through earnings, and then I was down and then I doubled up on it and then I doubled up to catch up. And then all of the wrong emotions that can spin out to it. Always trade your plan. There's no doubt about it.
Go pro.
There's a reminder.
Done that.
We
But-
won't bring up old stuff here. All right. We don't need to do that. Metals markets here.
I need
quickly.
to confess I need to confess to the Great Father on GoPro.
We need a video on that one, by the way.
You can't invest in a company on a challenge. You can't do
No.
that.
No, we should not.
That was
I got
that was a
goaded.
Matt hold my beer moment.
Listen, I aggressively manage that covered call system though.
Hey,
And
man.
you spent a year making a losing trade into a break-even trade,
But
You
I
could've-
did break even though.
but you could have traded other places. So I can
Absolutely
reverse.
right. That's why I need to
You need to
I
confess to the
give
Father.
Great Father. It was a terrible thing. I wasted a year of capital on some horrible company that I knew was going down.
I like this a lot. We'll put you in the confessional booth. We'll take a video. We'll put Noah in his stock.
You know what we need to do, Tim?
Yeah.
Is you and I need to go to a McDonald's and we need to have a McRib together and Facebook it. We need to Facebook live this and let Mark know exactly how we think. And by the way, we're creating this video, guys. Can we show the video?
Let's do it right at the end. Let's
Okay,
it
we'll do it at the end.
right at the
We'll
end.
do it in. I got to make fun of Mark for something.
I do too.
Okay, go ahead.
Well, I mean, here's the thing. Cody is putting together a little mashup of all the coaches doing little things in their lives, like being athletic, kind of, or being outside, or falling down, or it's all kind of funny. Coach Mark is playing his video game, which I love, by the way. I love the video game as well. But
Hey,
yeah,
you.
we'll show that right at the end. Keep working through the markets here, Matt. Gold, silver, platinum. Gold has found its price. It's $15 an ounce. I mean, that is where it wants to be right now.
Well, I would
trading
love
up
gold
and
at
down.
$15 an ounce. That
1,500 an ounce. Yeah.
that would be amazing. But yeah, you said it yesterday. You said it today. It's pegged to 1,500 until we see evidence otherwise.
Yeah, the market doesn't know where it wants to take it. The daily charts are mixed. The weekly charts are looking great for bullish traders. It's got a little bit of a flag pattern developing on the weekly, Matt. I don't know exactly where I would pick up new entries. I haven't bought more gold or
Oh, you
added to a
don't?
position in a while.
You don't. There's
Yeah.
nothing to add here.
There's nothing here.
You
There's
don't.
nothing
You
here.
don't chase it at the top of the weekly chart. You let it consolidate for the next month or two, or you let it retrace on the weekly chart. But you don't chase it. You let it set up. You be patient. Patience
Yep.
is a position, and that's what we got to take on gold and silver right now.
Silver, real quick, look at it. Same chart.
Just more volatile.
Little bit different. Yeah, the weeklies are a little different, obviously, but that daily chart almost looks identical. I'm looking at a picture here, cross by cross, and man, on the daily candlesticks, they are moving very, very much in line the last month or so as they're pulling back and hitting the same moving
It's
averages.
just more. Silver's more aggressive than gold is.
Yeah.
Silver's a swing trading vehicle. Gold's a position trading vehicle. So, but the patterns are very, very similar. Support at 17 on silver. That's where you're at right now. But you're not looking to pick up anything until we see something a little bit more cleaner on that daily chart on silver.
I agree with that. I'd be very concerned on a breakdown in the metals market here on silver. I'd be more concerned about silver than gold. Would you agree with that?
Oh yeah, fundamentally, yeah. When bull markets happen in commodities, silver's much more aggressive. It's a better swing trading. It's a better vehicle for price appreciation in a bull market. In a bear market, I'm talking bull market, bear market in the commodity space. In a bear market, silver will go down more aggressively than gold.
Crude oil, Brent, gasoline, they're all looking very similar.
By the way,
They're down near
silver, gold,
support.
and dollar all up today.
Yeah. Crude oil not down 1% here as we're trying to test out these support zones down here. Cody, you'd mentioned maybe I should have taken a little profit on that bull put yesterday. I know it popped up, gave you a little opportunity, but it's going to churn back and forth. You got more inventory data tomorrow, and risk off, crude oil is going to go down.
And see, that's exactly what I was thinking with the thought, not just looking at the chart itself, but yeah, the risk off, the report coming out tomorrow. The fact that this isn't starting to look like a little bit of a low base, I'm disliking the way this chart's looking right now.
Yeah. A lot of companies in the news I want to talk about here. Real quick, though, give me a look at Bitcoin. We don't look at it every day these days. It's been kind of stuck down here near 8,000. But man, a low base developing here, Matt. 8,000 I am concerned about as a Bitcoin holder. Okay. And I've held it for years.
Father
I
is
can't imagine
here.
I'd sell it here, but I might have to confess to
Confess
Bitcoin.
on that one too.
Yeah. I mean, I
That
obviously would
chart
not like to see.
That chart looks nasty on a weekly. I mean, just absolutely nasty on a weekly. Reversal signals galore. On the daily, it looks like a low base after quick price depreciation to the downside. Looking at the intraday analysis right now, T, you got a pretty clear support level right there at about 77.50.
Yeah.
I mean, if you're a holder of Bitcoin, given the weekly, the daily, and the intraday charts all kind of looking ugly here, 77.50 gets clipped. And I know the holders might not like this, but that gets clipped. You're talking another $2,000 down.
5K probably is in play at that point right away, pretty quickly too. And this thing will move 2,000 in like an instance, a 1 day or even a couple of day movement. Yeah. That's the way it works these days.
Well, that's because that's what safe haven assets do, Tim. They move, 20, 30% on an intraday chart.
Yeah. So we're not moving all the way into the barbell Bitcoin strategy, where we're putting half of our money in Bitcoin.
I don't think Bitcoin goes into the barbell. No.
Half the money in pot stocks, half the money in Bitcoin, held together by.
Hey, Cody, come on in here real quick. Explain what Tim just said, because I'm willing to bet 99% of people that are watching this either right now or later on don't understand what Tim just said.
I was in the middle of the chat, so I didn't even hear what Tim just said. Tim, what did you just say?
Barbell theory.
Yeah.
The barbell theory. Okay. So yeah, we talked about this yesterday on the pod. Basically, what it is it's a simple portfolio that Jim Rickards talked about in his book, where you think about a barbell. It's got its two weights on either side, and it's a protection against inflation or deflation. So you think about the weights. On one side, you have your physical heavy assets, your real estate, your metals. Those are protection against inflationary and then on your other side, you have your deflationary protection, which is your bonds and things of that sort. In the middle is where you have your cash and your liquid ability to move your portfolio into and out of these two different types of assets that give you two different types of protection. So your barbell portfolio, just a little bit of a simple metaphor to think about as things change in the market, you can shift your portfolio one way or the other.
Yeah, and I enjoyed the conversation we had on the podcast yesterday about some of the ideas behind the book Aftermath. And guys, if you are a podcast fan of ours, make sure you catch that when it was released last night. Matt, just a lot of really good stuff out of that podcast.
I loved the conversation, the discussion, and sometimes the debate on some of these principles, because obviously we're fans of Jim Rickards. He's an amazing author and economist. We're big fans of what he does, but that doesn't mean we agree on everything.
Yeah.
Right. And I felt like we had some really good discussions on that. I hope people enjoyed the pod.
Yeah, I agree with that. Some companies in the news I want to talk about before we go into rapid fire. But before we do that, if you're out there in our chat right now and you're watching our show, give us a like. If you're one of our halftime crew, if you're not, doesn't matter. Give us a quick thumbs up and let the world out there know that you're enjoying the show. If you're not subscribed to our channel yet, go ahead and click on subscribe. And if you're looking for a community of traders to join, we got a pretty dang good one over at Tackle Trading. And we always drop a link in the chat for a 15-day trial to our pro membership. Make sure that you're giving that a test out and you're going to love it. No question about it. Matt, many companies, number one, Domino's Pizza had earnings, and not only did they have earnings, I got to tell you, the headline for me, they announced $1 billion stock buyback program. We know what stock buyback programs do to the price, Breakout at 260 there would be a trend signal for me, Matt.
Well, I mean, that will tell you what the market likes more of, negative earnings reports or stock buyback programs.
We know what it does. It's artificial demand for the price.
Artificial.
And they contract the supply of stocks available in the market, and stocks tend to go up. A lot of the reasons why we've had a 10-year bull market is because of aggressive stock buyback programs. Investors know it. Yeah.
Records. We have set record after record after record after record. It's kind of like it's kind of like baseball. Home runs going up, stock buybacks have been going up year after year consecutively for 10 years. So
are you saying the ball is juiced?
I'm saying yes. I'm saying the ball's juiced. I'm saying stock buybacks are juiced as well, is what I'm saying. But yeah, I mean, it came in as a negative on its earnings per share, but obviously that $1 billion stock buyback program announcement was could be a game changer here from a technical perspective. Very, very volatile. But when you're looking at this on a daily chart, on a weekly chart, you might see some double bottoms right there.
It's got to break up.
By the way, amazingly, Domino's has had better price appreciation than Apple in this run.
No, I was going to say that Domino's, I think, was the #1 price appreciator since the crash. It was down at $2.61.
Yeah, it's at.
That's
I mean,
quite
we
the
make fun of it, but,
investment.
I
By
mean,
the
people
way,
are like, Domino's. Yeah, Domino's.
it is the
Domino's.
best of the bad pizza places.
I
Boo,
don't agree with
boo,
that. No.
boo.
Yeah.
Mm.
I used to
Uh-uh.
work. I was a pizza boy. I win. All right. Moving on. Facebook. I worked for
No.
Domino's in college for 1 semester. Absolutely did. Delivered pizzas. Know how to make the
Because
old
you
Domino's pizza.
delivered 3 times for a pizza company
Okay,
doesn't mean
okay.
you
Couple of
win.
things. First, if you're gonna say best pizzas, you got to go with some local place because every local
No,
place
I said of
does
the
something
bad
nice.
pizza spots.
Of the bad pizza places, I
Pizza
actually
Hut, Little Caesars, Domino's.
Papa
Little
John's.
Caesars.
Where's Papa John's in there?
Eh,
I love me some Papa.
Yeah, Little Caesars is edible. I'll leave it at that. Facebook is being probed by 40 attorney generals here today, and Matt, the stock's not
One
really
way to put it.
reacting. Yeah, it's not exactly a good news headline. I expected more volatility, more risk, but maybe it's already kind of baked in because this has been coming for a while now. So,
Well, we talked about it on the podcast yesterday as well during the debate. And, my concern, well, I said my concern wasn't people jumping out of high flyers. My concern was regulatory. This is nothing new, Tim.
Yeah.
This is nothing new. We've known for 2 months that these states were signing on for an antitrust violation from a lot of these tech firms.
yeah,
And so now it's just the news has already been out there. Now that it's actually come to fruition, this is like the Fed saying we're going to cut interest rates, and then they cut interest rates and nothing happens because it's already baked in.
Yeah.
So I think what's not baked in is the outcome of those antitrust lawsuits.
Which is going to be big, obviously. I mean, this is maybe one of the biggest stories for Facebook in a decade. And, who knows how it's going to shake itself out. But, Matt, they do have to have some antitrust probes. There's a reason why there's support on both the left and the right for this. They have a very firm grip on a lot of the way they put content out there. And we've got to have some regulation on it. There's no question about it. GameStop is down.
Real quick on this. I agree with everything you just said on like the regulation and someone stepping in, but just as a fruit for thought, is it really smart as you're trying to campaign against the greatest marketer engine that you could use to attack the greatest marketing engine you could use?
Yeah, well, I mean, attorney generals are lawyers. They don't really care about that.
Well, I mean, I'm talking about the candidate that's saying that it's going to destroy it. It's like, is that really
What's
smart?
Facebook? I mean, first of all, people who are on Facebook hate Facebook. So I don't think it's an unpopular opinion. Most people will even share that. Even if you're on Facebook, you're like, man, I hate this. I have to be here because my nephew or my niece has pictures on here and all that.
But they also own other companies and other apps like Instagram that could decrease ad share for particular political campaigns, which was something that the right was yelling about. So do they really want to step into that?
Shouldn't that lead you to the realization that people have integrity and you should support that though?
Yeah.
I support the regulation. I'm just saying, is it politically smart
about the political, drawback that she's going to play out her what she believes in?
But if no one sees her message, does it matter?
She'll get her message out there, kiddo. Don't worry about it.
She's doing just fine with getting her message.
I would not worry about that. GameStop, by the way, and obviously this company's been under pressure for a long time.
Can I just ask you a question?
Yeah.
What would it take for you to say, I'm going to invest in GameStop?
They're bought by another gaming company.
As a distributor?
If they change business models into selling burritos, I might be interested.
Honestly, GameStop should have done what Sony did recently with PlayStation. Their unlimited game, like $5 a month thing they just released. That's brilliant. Just like Netflix or something, you get a subscription and you simply just log into your console and you play games.
Who goes into GameStop anymore to buy stuff though? I mean,
that's what GameStop should have switched to like 10 years or 5 years ago. Whenever Netflix started taking off, GameStop should have said, hey, we should do the same thing. And there was a company, I think it was called Gamefly, that started doing it, but they were still doing it through the mail. They should have done it online. GameStop should have moved online. Now you have...
They're so behind those other big
they're so behind. That's the problem. They're behind the Powerball. Could they still possibly do it? Yes, but it'll take a business deal.
Let's play a game. Okay. Remove the name and the symbol from the equation. Okay. And look at this purely technically. Okay. You have obvious increasing in the momentum coming down, right? Snapback rally on the weekly chart over the last 3 months, coming right back into the very key level of resistance right here at about $6.
Yeah.
Could you make a technical argument that a reversal occurs if GameStop goes above $6?
Yeah, but I don't like the reward to risk even at that point. I mean, where are we going? 8, 750? I mean, the gap fills 730.
Yeah, but a $1.50 on 6 is like a 25% return.
I get it, but they gapped from 15 on non-earnings to 11.
I'm not saying do it.
No, I see it.
I'm seeing if you and I've been doing this for 3 years on GameStop. It's a bankrupt company that failed to evolve in the online business model, and it upsets me because it's a company I like.
A technical
taking
signal at 6
and talking to the dude about what switch game that we can play as a family. I
Sure.
like that, right?
Dude, I still like the record store, but they're not publicly traded, right?
For a reason.
Exactly, right? It is
what it is. The same reason that GameStop failed.
Yep.
Right. It just wasn't, Sony and, Microsoft with their big box gaming systems that destroyed them. It was Napster and whatever that was back in the mid 2000s, right?
Yeah, 100%. I don't know. I mean, the signal at 6 would be a technical signal that you could call, it would be a breakout.
It would.
Whether you take it or not, that's a different discussion. But
no, I'm not. Are you kidding me? No, I'm just saying sometimes we can get so opinionated about something, but we shouldn't just have an opinion based on what we think. We got to read the chart as well.
Trade what you see. Yeah, I agree with that. I mean, GameStop kind of falls into those brick and mortar stores that I believe are probably destined for really bad times, like bankruptcy, like Rite Aid, but it doesn't mean that Rite Aid is going to go down every day either. RAD, nope. Same thing with GameStop.
GameStop GME. Is the Blockbuster of video games.
Yeah, I think it might be actually.
Most likely.
Yeah. A couple of companies off of our reports that I really like here today, Matt. Costco, KB Homes. There's some relative strength even on the buy side. When the market sells off but then shows you intraday signals, you go to your bull list almost instantly and look for some relative strength. Costco looking good. The home builders are looking good. DR Horton DHI is on one of those reports as well. What are you seeing Costco here?
I'm seeing price appreciation coming off that 50-day moving average, coming into the bull zone, reclaiming intraday resistance levels and confirmation.
Yeah, I agree with that. I like the home builders
technical setup, but there's not a whole lot of perfect technical setups there.
No, and you're dealing with a kind of a rotation into a company that's been defensive in nature. I do like the plays on these home builders, and
KB Homes looks real nice right here.
Yeah.
I memean, that's a high base, flag based pattern breakout. DH Horton, another one. DH Horton breaking out of a retracement it had last week, continuation now this week, bounced off the moving average as well as the trend line, and that is obviously confirming on the breakout today on DH as well.
Some weak patterns. Netflix, I wish earnings was another 2 weeks out and I would be building something almost instantly. I love this retracement here. Netflix is not out of the woods at all, and they're backfilling here. They've got some clear triggers you could play on candlesticks.
Yeah, I think we're tight. We're too tight.
It's 7 days. I mean, you can't really do it. You'd have to day trade off those signals if they develop. It is what it is. But Ameritrade, we talked about the big broker news last week, and down just a hair here today, 1.5% on that weakness. I still believe a break below support is tradable. That's why I was on a report this week on a momentum.
100%.
Yep. All right, guys. Cody, set up a quick 5-minute rapid fire for us. Yep.
Very quickly. You mentioned this earlier today. I just thought it was a good trade, so I wanted to bring it up. Strangle straddle on volatility build coming on Tesla here. Tesla's earnings is in about 2 weeks from now. I do expect volatility to build coming into that. The straddle strangle might work out there if you want to price that out.
Yeah, I saw that one because I had a question in the class I was teaching last night, and he's like, "Hey, I love Tesla. Is it a good one to buy?" And I'm like, it's neutral in a range with volatility going to build into earnings. And it was like instantly like, okay, there's a vol trade. Yeah. I'm glad you remembered that one. Yeah. I do like Tesla.
Emily says in the chat, can you please explain why we don't plan in our portfolio to cash flow our growth assets? I don't know whoever said that, Emily.
we might be mixing
Love doing
terms.
company calls and IRAs.
Yeah, I mean, if you own equity, you're going to cash flow on them.
Your cash
Traders
flow
do
on it.
that. Yeah, for sure. And even if you own leap options, you're going to cash flow on them. So yeah, I
Yeah.
think you might be mixing terms there, Emily. Clarify, send me, buzz me a Twitter, direct message or something like that. I know you're very active on Twitter over there at our Team Tackle. We got some stocks coming in here quickly. Matt, if you don't know rapid fire, you're going to know it real quick. Let's start with Boeing, BA. News on this one today.
Yeah, Boeing had some news here today as well. There's negative news on the 737 MAX plane. They might have to delay orders, and there's also some Southwest pilot type strike type things going on as well. I'm not 100% familiar with the Southwest issues, but Boeing has some news here, and whenever Boeing has some news, it's a stay away from me, Tim.
Yeah, I agree with that. C-Trip, CTRP, I'll take this one. Just downtrend, bearish. There's no question about it. In fact, pivot confirmation yesterday, and now we're pressing support. A lot of times when you miss the retracement entry point, Matt, sometimes you can play the breakdown entry point when you have that confirming further. I would not call that confirmation on the breakdown yet, but we did get confirmation on that flag yesterday.
It's close, though, buddy.
It's close.
Look at that.
It's close.
It's close.
Yeah. DNP, Cody.
Let's see what we have here. DMP. I'm seeing.
Reminds me of did not play coach's decision.
That's right.
Yeah, that looks like it's struggling to continue to press that high. I'm actually seeing a possible double top or even a head and shoulders, a little wide one. Not liking the candle right now. Don't really see a trigger here.
Yeah. All right. Pepsi, Matt. Let's do Pepsi and Procter & Gamble. I'm going to give you both of them, two conservative companies, PEP here.
Pepsi, we've seen this play out a little bit this year in terms of breakouts. Breakout, retrace immediately to test the breakout channel. And that sometimes can be a really good swing trade signal. When you break out, obviously, if you're trading the breakout, you want to see it continue. But if you miss the breakout, this is kind of what you want to see. A little bit of a snapback coming back into the breakout channel right there at 137.50. That's where I'm seeing the breakout. I know you have the 139 there as well, but you got that double top right there intraday at 137.50 by 138. Breakout, retest. It hasn't confirmed yet. It's got to go above today's high to confirm on an aggressive swing trade. On a more conservative swing trade, let it close above the high of today, then trigger.
Two I'm going to take real quick here. Nano and DDD. I'll take them both here from Luis. NANO. Long-term neutral. It's got a little consolidation range here. Volatility is already at the high, so you don't really have vol build into next month. I'd have to be looking for something specialty or a K-trade setup where it breaks one way or the other. In that regard.
I don't see. You're not shorting under 32 and buying above 34.
I'm not seeing much there for sure. It's not going to go on my watch list. DDD. Nope. What Matt just did there is he called me out. I was trying to be very helpful, just give good analysis. He's like, you ain't doing that. Yeah, what are you doing? I like it. Triple D, diners, drive-ins, and dive style.
I could
Guy
just see
Fieri.
Somebody being like, well, Tim thinks there's a potential K trade. No, there's not. It's a garbage trend and channel. What are we doing?
It would have to do something extraordinary from here, and I don't see it yet. DDD.
There's not one chance you're trading this company in the next 6 months.
Huh?
Yeah, exactly. Now we can move on.
DDD, if you will.
Triple D.
Yeah.
Is it Cody?
It's neutral. It's low. Yes, it's kind of trending down. We got earnings really close. I don't see any move that could happen other than a break below 650. That would really be a strong move, especially with earnings so close. It's just slowing momentum at the bottom. Most of what's happened to it's already come out after that.
You remember this high flyer, T?
Yeah.
I remember this stock hitting $100. I remember it being on the IBD top 50.
Yeah.
I remember I remember one thing. When growth stocks lack the ability to grow, this is what happens.
Yep. I tell that to new traders all the time. You should have a list of companies or learn how to build a list of companies that if the market turns over, those high PE growth companies or negative PE companies like Uber and Lyft and those types, Matt, they get destroyed when the market falls out of favor with them.
They do. I mean, once they stop being the darlings of the market, they're dead, right? And we got to get investing 101 done at Tackle Trading. We have, Cody, when you're releasing Forex 101?
Deadline's been pushed back a few different times, but we're shooting for the next week to have it out.
Okay, now, Cody, when you see what I did, Cody, I publicly put you on the spot here.
Yeah, because last time I publicly on the spot, I pushed for a really aggressive launch date, and I got smacked in the face by Life and Time.
Yeah.
Okay.
Good life.
Now you're learning the lifestyle of an educator.
Yeah.
Right. Number two, though, after that, we got to get investing 101 done, because I think there's a flaw in people's investing where they just simply don't understand the simplistic difference of growth versus value.
Yeah, I agree with that.
And that's very important to understand.
Well, and even value companies, I think that there's a flaw even there. A lot of value investors are lazy. They haven't read The Intelligent Investor. They don't really understand it. And they think you can just buy low PE stocks. But a low PE company that's been losing on earnings and decreasing on earnings.
That's not the analysis.
That's not value investing.
That's not the analysis.
That's not value investing.
It has a PE ratio. It has a PE ratio of 4.
Right.
That's a great buy.
You know how many times?
4 years. No, that's not the analysis.
You know how many times I heard, well, GE has a low PE ratio for 2 years.
For a reason.
While it was going down. Just gave me an opportunity to bring up General Electric here at the end of the show. I got no problem with that. We already looked at Costco.
Down 2.63% again today, Tim.
It always just makes me happy. I'm in a good mood when GE is down. It just makes me happy. I don't know why.
Well, I'll tell you, you had a wonderful response to Mark when he questioned your GE yesterday.
Yeah.
Yeah, he did. I don't know if it was as good as the one in the podcast when I said, well, when Andrew Jackson did this, and I know, Tim, you don't like him, and you're like, yeah, genocide, Matt.
It's a one-word response.
we all hate that aspect.
It's like, yeah,
the point
but
Matt was making was he was one
genocide away.
At zero.
Genocide from the equation, and let's look at the analysis then, right?
Yeah, you can.
Saying him being the only president to take debt to zero. Okay.
Listen,
everything
all I'm saying is you got to give Richard Nixon some credit.
Listen, you can't say I'm conservative on economics, but I'm open to genocide. All right. It doesn't work from a political argument perspective. So Andrew Jackson, yes, still is the worst president of all time, in my opinion, putting him at the very bottom of that list.
On. Polk in Utah. Polk isn't really loved by Utahns.
Yeah. We could have that discussion.
That is an interesting debate. We should play that game on the podcast instead of that ridiculously boring and dumb game Mark had us play yesterday. Worst president of all time, go.
Ooh.
Well, not right now. Let's play it another time. Let's play it.
I'm not saying now, T. I'm saying on the pod.
No, I was trying to go for a joke, but you guys stepped right all over it. It's what it is.
Fine.
I was going to say like FDR or Lincoln.
But actually, if y'all want to make fun of Mark, y'all can always play that clip right here at the end and then make fun of him for that.
Yeah, a couple quick stocks, though. I don't want to miss on them. I did see them in the chat, and I like these ones. Taiwan Semiconductor, TSM, Matt. I was looking at the semis today, and obviously you've got all this stuff going on in China and political risk and all that type of thing. But TSM has just been a juggernaut this year and still breaking into highs. Yeah,
I want to chase it, but wait for a retracement here. Any retracement here is tradable.
But if you look at the semiconductor holders, SMH, it's like you're getting some stock picking in this sector. There's no question about it. They're more stuck in a range. AMD, by the way, 200. AMD's on the 200 period moving average. And I've got naked puts on it. I do like it for cash flow. Semis are kind of split right now. And I'm not sure why that is. I'm seeing some companies in semis looking really, really strong, others that are looking a little bit weaker. And I'm seeing mixed action in the semiconductor space. And I think we have Matt stalling, Wi-Fi issue, maybe.
No, Matt's fine.
No, there he is. There he is.
He just sat back.
I missed out on your soapbox on the semiconductors.
I will tell you this. I even put this symbol down in my notes, so I do want to bring it up. One last one here. It is the SOXS, Matt. Just a reminder, a public service announcement out there. If you ever want to bet against something, there's a thing called a bearish ETF that if the semiconductors did break down, Matt, this one would break out and start running to the upside. So trading vehicles only. Yeah, it's the inverse.
And these, they have inverted ETFs. Wall Street rates anything to your heart's desire. I'm sure you can find it.
Yeah, there's a lot of really cool products out there that are tradable. Jackson versus Polk, maybe on the podcast here, guys. What a show. Fun times. Cody, what do we got at Tackle Trading? We got to promote here today. We got our coaches show and podcast and
Coaches show is the biggest thing tonight. We have the coaches show going on. It is, I believe, are we still working on the segments of the spreads?
I think they're doing the strangle tonight, which is in
Strangle,
line with the
okay.
volatility building for earnings and all that
Tesla.
kind of stuff. Yeah.
Break
Tesla
down
would be a good one.
Strangle on Tesla. I like that.
Yeah. Yeah. And, that's one thing that we've added to our nightly shows, Matt, in our cash flow club and our coaches shows, where we do a teaching segment for like 30 minutes. And then we go live and actually demonstrate that teaching. It's been well received by our community. I'm happy that it's been an addition the last 3 months. Tackle Trading's got so much content. I mean, there's so many things that we can do. There's no question about it.
And then, of course, we told them time and time again that we were going to do the Aftermath book club, and we did it yesterday.
Correct.
So, guys, if y'all read that book and y'all were waiting for the Aftermath book club podcast, it is out.
I got a confession today, by the way.
What is it?
Father's in the chat here.
Guido Staccaducci. I adjusted my daily routine today, right?
Uh-huh.
And I turned on the TV and I started watching CNBC.
Uh-oh.
Okay? First time in 10 years, probably, for me.
Why would you do that?
Well, I was just like I was just reading the news and analyzing the markets. I was like, give me something to, listen to while I do it. And usually I listen to like a podcast or something like that. So I turned it on. I gave it the college effort here. I mean, 5 minutes complete. Right.
Yeah.
And I was like, oh my God, people actually watch this.
Do you think, I remember when we started trading, I watched it every day.
I'm not done with my confessional.
Okay.
So I switched it to Bloomberg TV. Okay. It's like, well, maybe I'll give Bloomberg a chance. And I gave that 5 minutes. Right. I gave that 5 minutes. And I'm like, oh God, they're saying the same stuff. All nonsense. Just pump. Right. And it's just like, oh, I can't take it anymore. I gave it 10 minutes, Tim. I gave it 10 minutes. And then I capitulated and gave up.
Yeah.
And so I have to confess, and I might need some counseling from the great father on this one, because I don't know if I can remove from my ears what I heard. I don't know if I can.
The amazing thing about those television networks, obviously, it's a representation of what's wrong with paid news in America as well as
100%.
across the globe. 100%. They're not interested in helping you break down the markets, guys. I mean, that's a media unit that's interested in keeping your eyes on the screen.
Yeah, they'll airtime and sell ads. That's their job.
Yeah,
that's what they do.
And I do believe Jimbo I do believe penance is time served on this one. I've served my 10 minutes. That's all I have to have. Okay. I agree with Jimbo.
No, I don't think so. He says you got to watch HGTV and maybe go watch one of those real estate shows where they flip houses or something.
That's like
that might be the worst thing for me of all time, because all those shows are marketing.
Yeah, it'll drive you crazy.
Hey, also, Joanna out of Waco, Texas, they built an empire off of that show.
Yeah.
I had a dress as him.
They now have like
2 years ago.
What is it? It's like
I don't even know who it is.
Their own shopping mall type thing. The silos that people are like,
oh my God. I'm not going to say a negative word about them, because then people will blast us.
Yeah, don't do that. They're fantastic. Love
my
them.
wife literally had me dressed as him for Halloween 2 years ago, and I don't even know his name.
You never know with public personas. They seem like good people. And you did dress up as the guy. So no, we shouldn't trash him. Although we do have Halloween coming up.
Trash him on.
Nobody's trashing him.
There's no
Cody was giving him a compliment, building an empire.
I was.
Yeah.
I was going to trash him, but Cody came in and saved the day.
I like it. Market is coming back here intraday, by the way, kind of recovering. We got a couple hours in the market day. Oh, neutral.
Let's take a
still
quick
neutral.
peek at that 30-minute chart.
There's nothing here.
No.
Stack theta.
I like some of those. Some of those scatter reports are setting up pretty nicely, though.
Oh, dude, the scatter reports are killing it this week. And by the way, I'm glad you mentioned that. Guys, the pro membership alone, $97 a month. If you're a trader, if you're interested in education, joining community, it's an easy call. And if you're wondering what's in there, just sign up for a trial. Members. That's right. People love it. There's no question about that. But Matt, a report like the option report over the weekend, that's worth $97, quite frankly. It is. We always add more value than that, obviously, but even
Yeah.
just that one report like Noah did over the weekend, it was incredible. Noah, you did a great job, Father Stockaducci. We appreciate it. If you've not watched that option report yet, go and check it out. I think it would really help beginners. And I never know in these last 5 minutes.
I think he did get frozen that time.
Frozen right there for
I even
1
had
second.
to stop and check my internet. Oh, I saw him blink.
No, it's mine. My son's doing something with the Wi-Fi. He's driving me nuts.
Is he gaming right now?
Probably. But Cody, let's share the video. Share the video.
Oh yeah.
Tim's got it up.
I've got it. Hold on. Let me see.
So guys, basically I put together a compilation of the coaches with some music behind it, some subscribe buttons, try to encourage some people to follow our channel.
Sorry, Cody, I was trying to set this up. So you put this together. This is your creative mind with Jessica also working with you, I'm sure. Is that right?
So yeah, my creative mind with Jessica's marketing specialties as to us building this, so that we're gonna add this to some of our YouTube videos to encourage people to subscribe and then follow, build our community, get bigger and bigger.
So what you're going to see is 5 short clips of Matt, Tim, Noah, Gino, and Mark. And I want the halftime crew to tell me.
Pick up Mark's.
Yeah, here we are. Let's roll.
Hey there.
Was that a one-shot, Johnny? There, did you make that on the first video?
No, he didn't. There's no way.
Hold on. Yes, I did. Yes, I did. First cut, but my son didn't shoot the ball for the video.
Oh.
And then it took me about another 20 tries to get the swish, because you had to get the swish, right?
That wasn't a swish.
It was a swish.
Go back to it.
It was a swish.
That was net, bro.
I saw rim.
Oh, let's get a slow-mo on this one.
Oh, there was
that
rim.
was a
Back of the rim.
There
No.
was no. Oh, what are you just
that? I saw it. Look, we have video evidence. That was the back of the rim right there.
Are you sure you're not seeing the subscribe button hit the back of the rim?
Here we are. Balls in the air. Balls in the air. Okay. Here we go.
Oh, skip one too far.
I'm gonna need
that's net, bro.
the subscribe. No, here's the problem: is subscribe button went over the ball. That hit the back of the rim. I'm gonna need an audience.
Listen,
It's a good shot. It was
all right. Well, y'all are turning on each other. What they wanted to show you guys was the fact that Mark decided that his clip of what he likes to do in his spare time is play Warcraft.
Yeah, well, nothing wrong with that. Games are
all
a
I
great
wanted
thing.
to do
And
was
actually,
get
in his
him
video, he
watering
said-
his grass.
He didn't want to do it.
That would have been even funnier.
He did
He would
not
do
want
that
to
one.
do that. He did not want to.
All right, guys, we're out.
Yep.